Hello, everyone. Welcome back to Tampa Real Estate Podcast. I am Said, your host, and today I'm joined by George, the CEO and founder of Greystone Investment Group. So, George, I wasn't really sure how to pronounce your last name, so I wanted to kind of repeat it. Can you, first of all, welcome to the show. It's really nice to have you, my friend, and let us know about your last name as well, please.
Super excited. Thank you for having me. You say Jorge. It's kind
Oh,
of hard to roll
Jorge.
the R, but Jorge Vazquez. But you can call me George. That's fine. I've been in US for since 35 years, since I was
35 is
15.
awesome. I knew it was
Yes,
hard, so I didn't dare to pronounce it. George
I'm
Jorge, that's
originally from Puerto Rico, but
it.
yes. Mhm.
Thank you so much, my friend. I really appreciate it. I really appreciate it. So,
Thank you for the invite.
I think you have been in real estate for more than 20 years, and you have done a lot of things. You have been involved in thousands of transactions, has built a business that goes well beyond a traditional real estate brokerage. So, let's jump into it and let's get into your story first, George. Before we get into Greystone and what you're doing today, I always like to start from the beginning. How did you originally get into real estate?
Okay, so I mean, I've always liked Monopoly. I was one of those kids obsessed with Monopoly since I was five. So looking at owning properties and stuff like that. And then I knew the minute I turned 18, I knew that I wanted to go and seek for my first property. So
Mhm.
I figured that I went to school actually for computer programming and ended up working for a bank because I feel like that was the easiest way to learn the lending part of it when it comes to real estate because I didn't have any money.
Mhm.
Uh, I was with a bank financial institution for 5 years, got my securities license. I became a financial advisor, killed it. I was number one in Tampa for many, many years. Every year I will win advisor of the year. And I also at the same time I was buying properties. I was the first kid with a property from high school. I think I bought my first one at 21, something like that. And a lot of the clients that I had under wealth management that were buying stocks from me, mutual funds and things like that, saw me doing real estate and they're like, man, I know you're doing some real estate on the side. Can you tell us a little bit more about that?
Mhm.
And I started selling, I started presenting to my clients real estate as a viable option to
Mhm.
stocks. But and you seem pretty young, way younger than me.
Yeah.
But
Thank you.
back in those days, it was the beginning of social media. So you
Mm.
had MySpace, right?
Mhm.
So what happened with me is my directors of my financial institutions saw me talking about real estate online. They're
Mhm.
like, nah, you cannot do that. You have to stick to stocks. And because of my MySpace. Then
Mhm.
one thing led to the other. I started making more money advising people in real estate. People were doing better. And painfully, I had to let go of my securities license and jump fully into real estate. And that was
Mhm.
about 22 years ago. Yes, that's how I
Mm.
started.
Awesome. Greatest story. Greatest story. And one thing that I also noticed about losing 22 properties and rebuilding that part because, honestly, I found it, through the research and I wanted to tell you. So there was a part of your story that was really interesting. You have spoken publicly about going through the real estate crash and losing 22 properties before eventually rebuilding. What happened? Let us know.
It was awful, my
Yeah.
friend. Up until like a few years ago, I was taking therapy for that because it
Oh
really,
my God.
really, it was very tough. I mean, so first of all, I was young and stupid. Let's start with that. So I thought I was invincible. So when the older people, my parents and people that have been in the business longer than me, were saying to me, "Be careful," I was like, "No, no, this is gonna continue going up forever." And I just made too much money very quick. So my
Mhm.
early 20s, I had 22 homes, a mansion, cars, travel all over the world, had in my checking account disposable just 300,000 sitting around. So that will do it to you, right? You think that you're invincible,
Exactly.
that nothing's
Exactly.
in 100%. I mean, I was a hustler, always been, but it had to do with the market. They were giving loans to everybody, right?
Hmm.
Everybody, as long as you had a heartbeat, you were approved. And I always tell people to put things in perspective because a lot of people blame the banks. I do
Hmm.
blame the banks, but I also blame people for being greedy because this is a real story, my friend.
Yeah,
I'm at
go
the
for
bank.
it.
I'm at the bank sitting. By the way, the bank institution I worked for was Wachovia. Okay, the first bank in the United States I went under was Wachovia, the
Hmm.
first one. Why? Because they were offering these toxic, crazy loans where you would pay $200 for a $300,000 mortgage, and then their
Wow.
their idea behind it, the way that they will make it sense, make it work, they'll say, no, you go into negative equity every month, and people bought it. So you had older people that were in retirement with a fixed income coming to me saying, when I was at the bank, can you lend me 300,000 where I only pay 200? And I remember having this conversation with this lady and saying, man, do you understand what you're doing? You know that you're putting $1,500 on your principal against your principal every single month? Well, son, if you don't do it for me, I'll go to another bank. So people were memorized by this type of loans. So that's what happened. There was a lot of fraud going on in
Hmm.
2008. Lost everything, my marriage, my houses. I was living in the street. I was about to commit suicide because I was like,
Oh.
I'm piece of shit. I'm crap. I don't, it's not worth living. It happens to you when you get that successful at 20. And the first thing you think in your mind is like, what are your
Mm.
friends gonna think about you? Like that really matters, you know? But when
Yeah.
you're in that age, you're like, oh, they're gonna think I'm crap. And as a matter of fact, as I was going through that, out of my 200 friends that I have, I end up only with two that really care about me and follow up with me. But
Mm.
very dark times, became an alcoholic. I never drank before. Then I was an alcoholic for like
Oh
10
my God.
months. Uh, and because I was so stupid and stubborn, I started borrowing money from individuals to get the business, on float, above water. And I borrowed $500,000 from people just to try to keep the business going. So I kept the business going for another 2 years. And then at one moment I said, after not being able to sleep for, you imagine waking up
Mm.
1 in the morning to check the bank account to see if your payroll went through with your employees or do you have to add money every single night for a year? Like we're like, you can't even go to sleep because you got to check your bank account. Then on top of that, owing people to owing money to people, not
Yeah.
financial institutions, people. I have some of them that got really pissed when I told them I can't pay you. Some of them that said, in my country, this is how we settle debt and show me a gun. I had other ones that would say,
Oh my God.
Jorge, I see you at the most wanted. You be at the most wanted, thing one day. So I was getting threatened all the time for the people that I
Mm.
owe money to. So it was devastating. It was crazy. Even when I think about it, I want to tear up a little bit because
Oh
it
my
took me a
God.
long time to come back from that because 2008, I don't really see, I don't really believe that we'll see another 2008 anytime soon. And just to put it, Said, to put it in perspective,
Sorry.
somebody actually interviewed me 2 weeks ago, and he's my same age, and he went through the same thing, and we were both like tearing up a little bit because he there's no one that you could turn to that was doing well. Like mom lost her house. I lost my house. My brother lost his house. Everybody I know lost their property. Nobody had a job. It was very tough. Uh,
Yes. George, I gotta tell you this, first of all. I'm sorry to hear all of that happen. I can't even imagine what it would be to live in such a love. But the man that you came from, the George that came out of that situation isn't the same George. Like there is a quote from Plato that I really love about like that he says that the greatest people of all time are the people that go through a biggest tragedy, a big sad event, and they come out of it, they conquer it. So man, I gotta tell you, you have been in a tough situation, but I kind of want to say congratulations for becoming the best version of yourself. It's not easy, man. So salute to you, my friend. Like, that's I think that's super, super important. Like, coming out of such a thing, that's not something an easy person can do. You never kind of yield, you never kind of defeated, you never said I'm done. You said, hey, I have to keep going on. And man, from a man to another man that has a family, like, just like you, I have people like, probably my own employees, my own company. I gotta tell you, my friend, look, that's the bravest things that I have heard in the whole year, honestly. So
oh,
great job at that, my friend.
yeah,
Cool.
man. It was crazy, and how I came back is crazy too.
Thank you. No, I never thought that it was like I thought like, hey, I found it, but I never thought it was that hard. But I think you really did a great job with rebuilding yourself. Not a lot of people can do it. Like, I think you're 100% sure about that part.
Thank you, thank
Cool.
you. And how I came back was one of the guys that I owe money to.
Hmm.
He comes to me, and I'm like, "You want a 5 years on? I don't have your money." And he said, "Let's go to church." And that's how I came back.
Oh my God.
I was, I swear to you, I feel like God was talking to me just like you and I are talking. I'm not a preacher. I don't like to preach, or I'm not even that. I don't go to church or anything like that. But I feel like God said, "Get up, get up," and He was talking to me like this. This is not the end. Get
Mhm.
up, and that's how I actually after that I went to another investor that I owe money to, 100,000. And I said, Tony, can you lend me 10K? I want to restart this thing again. And that was about 15 years ago when we
Oh my
restarted
God.
again.
Oh my
But it
friend,
was,
like you had a obviously you had a mission. You gotta kind of keep going on. You gotta help people, George. And I think that's super, super rare. And kudos to you for keep going on, man. I love everything that you have mentioned. Cool.
thank you.
Now let's shift a little bit into building what you have right now, which I think is super, super exciting, Greystone. So eventually you didn't just rebuild your own portfolio, you built Greystone Investment Group. So today you are involved in acquisition, investment consulting, financial actually coordination and all of that. So at what point did you realize you wanted to build this entire ecosystem instead of just doing deals yourself? Let us know about it.
So absolutely. I mean, after I went through 2008, I was like, I need my own ecosystem. I need my own recession-proof business. It was
Hmm.
no longer about how profitable I could be and how fast I could be profitable. It was about how can I be stable. This happens again. How can I survive it? Because God knows I cannot go through this again. I don't think
Yes.
I have the strength to go through this again. So I was like, I'm gonna live beyond, not gonna live beyond my means. I spent the past 15 years without buying a car. I just bought a car recently, a very nice car, by the way, sport car. But
Oh.
it took me like 15 years to do that. And I wanted to create an ecosystem that, if the market goes down, the company could thrive. If the market goes up, the company could go up as well.
Mhm.
And that's where I decided that you invest, we do the rest, because there was a need. within this market, there was a need. There's a lot of wholesalers. I call it the wild, wild west. There's a lot of wholesalers throwing numbers, inaccurate
Yeah.
numbers,
Mhm.
selling off market properties, burning people left and right. There's about 100 stories that I've heard from other people. So I was like, how can I make this kind of like the same way that I present stocks in the past? How can I, formalize this, make it more elegant?
Mhm.
How can I
Mhm.
protect people? Because people, believe it or not, people know more about their 401k than they know how to invest in real estate. They don't know the lending options. They don't know
Exactly.
anything. So that's why that was my mission, to help people build portfolio rental properties, even if it was one at a time.
That's great. That's great, actually. I love it. And you have built a team of like, plus 65 agent. I think that's significant, honestly. This is a significant organization with a Greystone describing a team of more than 65 agents. That's very different from being a solo investor. So let us know, what is the biggest lesson you have learned about building and managing a real estate team at this scale?
So we is you have to understand why you do things.
Hmm.
And there's things that you do knowingly that they're going to be a loss leader. In other words, there's things that you're going to do that are
Hmm.
not going to generate you income, but
Hmm.
that are going to generate you maybe the tools you need for the other products that you have to generate income. So in our case, one thing I learned is knowing our identity and saying, okay, what is our main product? In our case was property management. That's why property management, because of the cash flow. So it's like, okay, here's our main product. So identifying your niche, becoming really good at that niche, because there's a sea of agents, there's a sea of people in real estate. So we said, okay, we're gonna be the investors managing for investors. That's gonna be us. And
Hmm.
we're gonna provide zero tenant placement, because that's very painful when you're a new investor. You're buying a property, you got to wait 30 days for the property to rent, and then wait another 30 days to get paid because the first month is collected by PM. So we decided we're going to be the only ones in Tampa. We're going to place your tenant for free. We're going
Hmm.
to be investors, managing for investors, because we know what is too much of a rehab, what's too little of a rehab. And then what is the system that we could put around that to make sure that there's always business coming. So we came up with a brokerage. Okay. Brokerage is a very difficult business to be done on its own. I
Hmm.
would say if you look at the stats, 95% of the brokerages fail because there's a lot of competition out there, right? You have to compete with two models: discount brokerage and full service brokerage. Full service brokerage, you have Coldwell Bankers of the world,
Hmm.
Remax of the world, and they're freaking pretty much college campus. I mean, they have
Hmm.
so much education that you can never beat, you know, compete with them. And then you
Hmm.
have discount brokerages where, like, at least here in Tampa, you have People Choice, $99 a transaction. They have 5,000 agents, and that's how they make it work.
Hmm.
So unless you have a niche brokerage, it's very difficult. So
It is.
we know our brokerage is a loose leader. So we know the direct efforts that our agents are going to do are not going to yield enough money. We know that. Okay. So for instance, we get an agent to come in. We say, in order for us to, we're going to give you no desk fee, no monthly fee, nothing. I'm going to take care of you in your retail side, but I have to see you do some investor side. And then what happens is I have agents that haven't made me a dollar on the retail side for 2 years, but then all of a sudden brings me a property and we
Hmm.
make $100,000 together. All of a sudden they bring me an off market deal, we make $100,000, or all of a sudden they bring me an investor, we make $50,000. I want them close to me. So in summary, we do the lending, we do the property acquisitions, we do the brokerage, everything to fit the property management. So that's how we did it.
Awesome. Great point, actually. You mentioned very, very good point. Thank you so much for that. So let's talk about Tampa real estate in 2026 right now as well. You've been investing in Tampa for more than 2 decades, so you have watched the market go through very difficult cycles, and I know you did. So what are you seeing right now in Tampa that people outside of the market may not understand, or you think they should know?
So the first thing, there's a lot of misconception about thinking that Tampa gets hit by a hurricane every single year. Well, that's not true. As a matter of fact, I wrote the number one article right now, I think, in the world, where you could Google how many times Tampa gets hit by a hurricane, and it went viral because
Hmm.
I don't want to bore you with the story, but the real fact is that we haven't gotten hit. We've only gotten hit twice in 200 years, so directly. But people out of state have this misconception that we get hit all the time because we see that in the news. So that's the biggest misconception. The second, they think of Florida. Florida used to be super affordable, and it still is, except from like Miami. That area is untouchable. But Central Florida has a lot of great spots where you can still cash flow. And it doesn't necessarily have to be Tampa and Orlando. It could be Newport Richie, Port Richie, Holiday, Hudson. So there's a lot of areas that do very well, whether it's short term or long term. So there's two really good deals. And when you compare those prices, 150, 200,000 for a single family home, we're still pretty low with the rest of the United States, the rest of the states. Um, so I'm huge advocate, of course, of Central Florida or of Florida in general. There's we don't have state tax right now. It's going to go into a vote on November to get rid
Hmm.
of partially of the property taxes for the homestead. So that's going to be huge.
Yeah.
So long term. Oh, and by the way,
Hmm.
those high. One of the reasons I wrote that article is because all of a sudden, like 4 or 5 years ago, all of my insurance premiums for the 40 properties that I own, all of a sudden went up to like $400 each a month. And I was like, oh my God, I'm going to lose my portfolio because this is crazy. And that's what led me to do the research and find out that the insurance companies are taking advantage of this situation. But locally, legislation passed 2 or 3 years ago where allow the insurance companies to become healthier,
Mm.
because in the past you could sue them for anything. So there was a lot of fraud going on. I mean, I remember there was one time a lawyer came to me and said, "Hey, how many properties you own? Do you want to create 20 lawsuits? I could get you $100,000 per property from the previous storm." And I'm like, but none of them got hit. It doesn't matter. So there was a lot of fraud going on. So I
Yeah,
understand
yeah.
the part of the insurance companies. But what I want to report today with you is that they're back to normal. I mean, most of it, if you are proactive enough and are checking rates every year, you're back down to pennies of a dollar. Hard to say, hey, I want to cash flow $1,000 a month. Most of my
Hmm.
investors are more realistic, are looking for an even break-even scenario. And then long term, you have properties like mine that are bought for 75, they're worth
Hmm.
350, 10 years later. So that's a lot of equity. So I still pretty bullish when it comes to Florida.
Awesome. Awesome, George. Like very good points you mentioned about the insurance, like how was the situation and what they should. And I think I do still believe that Tampa is a fantastic place to invest in real estate. There is definitely no doubt on it. But let us know where investor get into trouble because you have experienced both huge growth and major downtown. You probably look at the risk differently than other people. You have such a massive, pure experience. So what worries you when you see newer investor entering the market today? Let them know what they should be worried about.
Number one thing, short-term rentals.
Short-term
It's
rentals.
very
Okay.
sexy on paper. Airbnbs, VRBOs, everybody's like, it's very sexy on paper. Everybody looks at it. There's a lot of people selling the story like, hey, man, you're going to make hundreds of thousands of dollars. But what I've seen more often than not is a lot of investors gravitating to us, coming, giving up, saying, I'm not renting this long enough to make any money. I want to do long-term renting. So be careful with that. There's a lot of operators saying that there's a lot of money in it. And I own two out of my 38 properties are short-term rentals, and I'm killing it. But my bases are pretty low when I bought this property. So unless you're focusing on corporate rentals and you have an affordable property you can rent, you could test it for a little bit, furnish it. If it doesn't work, remove the furniture, rent the long term. But you got to be very careful with those.
Mhm.
Um, when it comes to flips, it's a buyer's market,
Buyer
super mega
market.
competitive right now, super mega competitive. So unless you have a unicorn, something super, be ready to risk it. It's all about risk and reward. But when it comes to flips, you gotta do numbers. I don't feel like anybody that's doing flips, unless you're doing four a year minimum, once a quarter, should not be doing flips. Why? Because the numbers then are in your favor, right? If you lose your butt in one, you lost $20,000, but on the other
Exactly.
two you make 20, then you could have, you know, handled the loss. But if you're only doing one a year, it's not. You're probably gonna lose money. And when it comes to rentals, long term, just anybody that's promising you a lot of cash is exaggerating. Those repair estimates are wrong.
Hmm.
The best scenario here in Florida right now, and a good area and a good property, is breaking even, at least in year one, and then letting appreciation take care of the cash flow in year two, three, or four.
Yeah, I love that actually. Very good points, particularly in short-term rental because I see a lot of people that are talking about it. You got to be careful. Not every short-term rental is really the one that is going to create you thousands of dollars. Like, you got to be super careful with that. Very, very good point. I love it. I love it. So, I do have a bunch of rapid questions as well that I want to ask you. But if you're going to do that, then one last piece of advice from you, George, and I think that's kind of interesting. So, very short answer to these questions. George, one real estate book that everyone should read. Let us know what is it.
What? I'm sorry.
One real estate book, or I don't know, a course or whatever that you think that really help you
I
and you
mean,
think other.
rich dad, poor dad,
Robert Kiyosaki, I love
rich
it.
dad, poor dad, for sure.
Yeah, Robert Kiyosaki. Robert Kiyosaki. That was a good one. I read it like a long time ago, but
Get
very,
you
very good
started.
one. I can't agree more. Best advice you have ever received.
Be consistent. Don't give
Beacons.
up.
Man, this works perfectly for you. Don't give up. That's something that you are actually a living avatar of don't give up. I love it.
Consistency is what we. Consistency is what this new generation lacks of. Like, they want instant gratification, but they don't understand that uh, it's all about consistency. If all you do is stay consistent, you don't have to be a rocket science or anything like that.
Love it.
Consistency to me is the most important word right now.
Love it. Love it. Consistency. So one mistake every new investor should avoid.
Uh, Not verifying, not trusting, but verifying
Got it.
anything you do in real estate.
Good point.
Verify repairs,
Very, very,
verify values, verify.
cool. Cash flow or appreciation? Which one?
If you're 20, appreciation. If you're 60, cash flow.
Got it. Very good point. Single family or multifamily?
If it's 1 to 10, single family. If it's 50 units plus, multifamily.
Awesome. One Tampa neighborhood you would personally keep an eye on.
Seminole Heights.
Oh, good, good, good. That's a good neighbor, actually. And finally, what is the one thing you know today that you wish you knew it when you started?
Do not spend any money on crap. Just save your money.
Saving money.
Don't spend money on cars. Don't spend. Do not spend. Only invest. If when you put in money out of your pocket, it's not an investment. Don't do it.
Exactly. Very good point. Cool, cool. I love everything, George, that you have mentioned. This has been fantastic. I especially appreciate you sharing the difficult parts of the journey, particularly 2008, because I think hearing what happens when things don't go according to the plan is just as valuable as hearing about the win. So, is there any last thing that you want to mention? And also mention it, then let us know how people can contact you as well, people that are listening to podcasts right now, George.
Yeah, so the only thing I want to say, if you want to do this real estate thing, it's a marathon, it's not a race. Anytime that you do it too quickly, you're going to fall. Remember that flipping are gigs, and you might have a gig today and it goes well, the next gig could go bad. Owning rentals is owning franchises because you put management in place and your clients come to you, and then that's all you have to do. In regards to how to find me, you could say best investment for real estate companies in Tampa. You could ask your ChatGPT. It's gonna we're number one.
I
Or
love it.
you can find us at greystoneig.com. Greystone I.
Fantastic. Fantastic, George. That was really good. So, ladies and gentlemen, if you're looking to invest, I think there is no more reason that you should, there's no other reason that there is no better actually group out there that can help you. George is really the best one. Make sure you contact George with Greystone Group. And thank you so much, George. This has been unbelievably great. I loved everything that you have said.
Thank you for the opportunity. I appreciate it.
Thank
Thank you so
you.
much.